Hello, my dear friends. This is CH Chinmay Hegde, your learning partner for understanding FM practically. Welcome to day 13 of this daily sessions. Disclaimer, this is only for education purpose. Please do your own analysis before investing. As usual, we are dividing the every session into 4 parts. So the first part, in the short run, market is voting machine, but in the long run, it is a weighing machine. A beautiful quote. If you understand it, you can be the successful person in market. So in short run, the opinions are more important. After all, market is a demand supply, that is where price is determined. But in the long run, it is not about individual opinions that matter, it's about the worth of the company. And that is what we say in the short term, we do technical analysis, chart reading. In the long term, we don't go for the charts, we look at the fundamentals of the company. That's the basic difference between an investor and a trader. Terms of the day, I think most of you would be looking forward to this term, or maybe this might be new for certain people. Put call parity ratio. It's a very simple ratio calculation. Interpretation is also very simple but important. But before I go to the definition of put call ratio, I would like to discuss first between the holder of an option and writer of an option, be it call option or put option. If I ask about the risk, uh, whose risk is limited? Holder risk is limited because that is the maximum amount he can lose. What is the maximum amount? That is premium. Premium is the maximum loss, whatever he has already paid. Writer is, the risk is unlimited. And you know, holder is the buyer of the option and writer is the seller of the option, be it call or be it put. Now, since for every transaction, or I will say for every contract, there is a buyer, there is a seller, there has to be a holder, there has to be a writer. So if you cannot have if you want to become a holder, there has to be a writer. If you want to buy something, there has to be a seller. If you want to sell something, there has to be a buyer. Then among these two persons, whose point of view we should take it more seriously? And who is more professional? And who likes to have, or who generally has more skills, and that is option writers, option sellers, because they carry unlimited risk, and option sellers are like insurance companies, option holders are like the policy holders. So between the policy holder view and the insurance company view, whose view you likely to take more? Obviously, you'll go with insurance company. Like they have large capital, they have large data points, they have they have human resource. So they are the ones who are more reliable. I'm not telling they are always right, but they are definitely more professionals than the policy holder. On a similar logic, we apply option writers view is taken more seriously and likely to be the market indicator than the option holder's view. So keeping that in mind, put call ratio is nothing but the number of contracts or open interest, whatever the volume, you can say whatever you want. Let's say open interest. How much put writers, how many contracts are there? How many call writers, how many contracts are there? That ratio is put call ratio. As simple as that, it is put writers volume. I don't know whether you understand my handwriting. Put writers volume. You can say volume, open interest, whatever it is, divided by call writers volume. And who are put writers? Put writers are taking bullish view, thinking the market will go up. And call writers are taking bearish view. And if it is more than 1, for example, let's say 1.15, that means denominator is understood to be 1. So for every one call writer, there is 1.15 put writers. That is what the put call ratio means. And higher the put call ratio, that means higher ratio is in favor of bullish, so market is likely to go up. And lower the put call ratio, which means numerator is more, denominator is less, which we interpret it as bullish view, bearish view is more rather than bullish view. So more than 1, I'll say a little bit more. So more than 1, around 1 is very, very average. So we have to look at like 1.1, 1.2. That means higher the ratio, higher the bullishness. Lower the ratio, less than 1, we say it is bearishness. Now let us look at what is the situation now. Let's go to the internet. So chart, I'll come to it little later. So I'll just type simply put call ratio and let's say Nifty, put call ratio Nifty, because every index ratio can be different. So what are the link I'm getting? I've gone first. So India and for line link I've got. I hope you are able to see it. Look at this ratio, put call ratio. You see open interest ratio 1.29. And if I select it for the next expiry, that is 3rd of June, 1.12. Okay, let's just keep it today's expiry date 1.29. So for every one call writing, there is 1.29 put writing. Put writing means they are expecting the market price to go up. So the market sentiment is, in this data points will tell us the market sentiment is definitely bullish. People are expecting the market price to go up. I hope you have learned something new today. One of the leading indicators regarding the option trading. Keep these data points in mind before you take a position in option trading. So let's move to the next segment, that is what happened yesterday. Yesterday, even though everything was mixed and consolidating, I had taken a positive view and I had given 15,250. In fact, Nifty has gone to 15,300, which is actually, we say that Nifty is hovering around uh, long term high. Nifty is hovering on long term high, all time high, not long term, all time high. 15,003. 15 is the closing all time high, and 15,400 something, 430 something is the intraday all time high. And we have closed at 15,300. In fact, that was my day before yesterday's assessment. Again, the saga continues. FIs are bought, DIs have sold, very marginal amount. HDFC Bank, Reliance, the heavyweights are down yesterday also. That is a beautiful thing. In spite of the heavyweights not performing well, Nifty, the market index, is inching towards all-time high. And yesterday, the star performer were IT stocks, because in international market, Nasdaq, that is technology stocks, are performing much better than the regular stocks. You can expect the results like BPCL today. I think those stocks are in the focus today, but never mind. Sentiment overall is still positive. Okay, and also I forgot to mention one point. Indian market cap has hit $3 trillion. It happened a couple of days back. I'm just explaining you now. That's a very big achievement. When did India hit $1 trillion market cap, $2 trillion market cap? If you want to understand, you can have a comment or you can also check yourself. Okay, let us see what will happen today. What can happen today? Local cues are, things are getting better, positive. I think in some place lockdowns are being lifted. Global cues are, we'll look at the global cues charts. Let's go back to the internet. Let me just type global indices money control, where we get everything in one place. So global indices, let's see what is happening. Nasdaq is positive, technology stocks for European market negative, CAC 0.02 nothing, minus 0.09. It's almost flat. Singapore Nifty, SGX Nifty is 19 points, very flat. Nikkei minus 0.48, 0.48, 0.86, 0.45. I don't see really again any trend being happening. So I will say global cues back to PPT is mixed. And let's see what is our Nifty chart says. Let's go back to the internet. Nifty chart is a very important Nifty chart because today is expiry, weekly expiry as well as monthly expiry, last Thursday of the month. And this is what happened yesterday. Market opened up, but then went down and steadily market is going up. And let me show you what happened in the previous week expiry. That is on 20th. 24th. Okay, let us go for 20th. Yes, 20th. Huh. Okay, so this is what happened in 20th. You see, market opened high, then a big red candle. So market went down and then it consolidated. Again, it went down. And beautifully, next day, it has gapped up and started going up. If I were to believe the same thing to happen today, because overall the market is gone up very high and it's hovering around all-time high, and during all-time high you'll always witness a resistance zone. And if you see, if I just look at let's say 1 year charts, you see this is the point. Can you see this point? This is the all-time high, which was in February 2021. So about 4 months back. After that, we have uh, trying to reclaim and see the beautiful pattern. I would like to draw a little bit and show you the pattern. The way you have to understand the stock market charts. Okay, so see it all-time high. After that, it came down. It again went up. Again come down. It again went up. It came down. Again went up. Down. Up. Down. Up. Down. Up. You see, there's a or in fact, it's like a W pattern. We say W pattern and M pattern. One of the most popular techniques in chart reading. So once this zone is crossed, it might go up. But what is my opinion on the stock, like on the chart? Let me tell you. Let me go back to the PPT. So what is my take? What my chart analysis says? It's again going to be. I think it's going on a positive mode. That's what chart analysis says. My take, since it is all-time high, resistance will come, an expiry, and usually an expiry date, market will come down. That is my observation, my experience. So my take today, I think it's going to be negative. And looking at the support zone, looking at the charts, I think the support zone is around, if I just put it, let's say 5 days charts. I think 15,000, 250, I think is again going to be support level. I think around 15,250 again. My expectation for today is also around 15,250. Market might go down, go up, but my expectation, because of expiry date and global market being still flat, not giving too much of any positive news, and on expiry date rollover will happen, square off will happen, and especially during last 1 hour after 2:30, I will say market is going to be volatile, and usually more often than not I would see a negative closing, though next day it opens better. So that is my observation, and that's what happened in the last week. So that's it for today's discussion. Hope you learned something new. Tomorrow we'll come with a new term. Till then, take care. See you. Bye bye.